Well, hello everyone, and welcome to another YouTube live session right here in our VantagePoint software. I'm super excited to be diving into the topic for today, which is in fact something that a lot of traders struggle with. So if you feel like you've ever struggled with stop losses or maybe even setting profit targets, maybe you've never even thought of setting a profit target, you just let it run as long as it possibly can. But if you haven't thought about your goals for a potential trend, then you may be missing out on a big piece of your trade strategy, which can cause some uncertainty, can certainly cause some fear as well. So today we're going to walk through some strategies using artificial intelligence, specifically the AI here in VantagePoint, to help maybe you understand how to better set more strategic stop losses and also maybe start looking towards the future for those profit targets as well. So very excited to dive on in to this topic today. Before we get started, let me know in the chat, do you already use the VantagePoint software? If not, let me know that as well. Maybe say, I'm new to VantagePoint in the comments section. That's going to help me gear our session towards everyone who is joining us today, whether you're a VantagePoint family member already, maybe you're just looking into it, or maybe this is the first time you're seeing the incredible power of VantagePoint here in the system. So let me know in the chat and we'll go ahead and kick things off. While you go ahead and type in your comments, I'm going to go ahead and jump on into the VantagePoint software. So go ahead and do that for me now. All right, and I'll keep an eye on the chat as we go through the session today. So don't worry about that. Type in any questions that you have. My goal is to answer as many questions as possible. Thank you, Lloyd. Welcome to VantagePoint. And by the way, if you are just need more information on VantagePoint, you can also go to VantagePointForecast.com. I believe it's in the description, and then we'll also go ahead and drop that link in the chat as well. So after the session today, keep in mind, after the session, right? Because you want to learn about strategic stops and profit targets, but you can go to VantagePointForecast.com where you can access additional information about VantagePoint. But we're going to go ahead and dive on into our topic today. Now, as I keep an eye on the chat, don't worry, guys, we are going to be asking for ticker symbols, all right? So keep those in mind as we go through. But first, let's make sure everybody's on the same page because we do have some newer, attendees here in our live session today. So if you notice, we do have a couple of key pieces of information here on the screen already. And those key pieces of information or key pieces of confirmation, you'll hear me say a lot. We're going to walk through each of those individually so you know exactly how to use them, exactly how to read those predictive indicators that you're seeing on the screen, and how to strategically use that information to trade more proactively in the market. So as we take a look, let's just go over those base points of confirmation for an expected trend in VantagePoint, really show you how the artificial intelligence is working for you. So if you notice, what we have here on our chart is a blue line crossing over the black line. We can see that happening right here. When that blue line crosses above the black line and the trend turns green, that is a bullish or an up signal. It's really that simple. We try to keep the artificial intelligence that's happening behind the scenes, that's complex, but the application is very simple. And so when we see that bullish crossover, boom, we've got an expected uptrend. Now, we're going to work to confirm that with a few other pieces of confirmation. One of those being our neural index. So our green neural index down here at the bottom. This is going to be price action. This is predicting price action over the next 2 days. With that price action expected to be bullish, we can see that this is then our second point of confirmation. Now we have trend direction. We also have confirmation on price action as well. So as we come through and take a look at the predictive differences, this is the next step. This is the assessment of, let's call it momentum in the trend, the real strength behind the predictive movement here. Does this trend have enough strength to continue pushing it on up. And so as we take a look at those predictive differences, we can see that there are 3 different lines. Those are all going to be on different time frames. So we have the short term, which is a 1-day strength predictor, the medium term, a 2-day strength prediction, and then the darker blue line, which is the long term. So the light blue is the short term, that's a 1-day. The medium term is that magenta color, that's a 2-day. And then of course the long term, we have that darker blue, which is that 3-day strength. And so when we have those 1, 2, and 3-day pieces of strength confirming not only the trend, but also the price action, now we've got a lot of confidence in this movement to the upside. And so taking a look at that trend to the expected upside, we can see that this is really where things start to move bullishly for PEP or Pepsi in this case. So that's exactly the ticker symbol we're looking at. And again, we'll take some more here as well. Everybody give me a thumbs up in the chat if that's good for you. If we need to review a few more, we can, but I think that's pretty simple. We want either green or lines moving up for a bullish signal. Let me know in the comment section if you guys are good to go. Oh, Gail, thank you. It is a great day anytime we can look at the Vantage Point predictions, right? Oh, it's a great day every day in my book then, right? Very good. All right, perfect. And we will take a look. All right, CRSP, I think that's CRISPR, right? We'll take a look at that. Thanks for that suggestion, Gail. I appreciate your ticker symbols. All right, so let's see how to manage this position, because this is also another very important piece. And so managing a position is oftentimes where traders really make it or break it. And so as long as that blue line remains above the black line, you're really confident in staying in that position. There's really no crossover to the downside, and that's the first piece we look for. So without a cross to the downside where the trend turns red, like what we see back here, you really do have confidence to stay in that trend. Now, some of you who are, let me ask it this way, who is using stop losses already? Let me know in the comment section. Perfect. I see some responses coming in. So go ahead and let me know, are you already using stop losses? And tell me a little bit more about that. How are you setting your stops? Do you use any specific key levels? It's a hint that we might be looking at key levels today, right? So as we take a look at position management here within this trend, I'm going to switch over our chart view to a slightly more detailed version. Now, before I do that, I'm going to jump into the predictive trade candle. So if everyone sees, I'll just jump in a little closer. We'll just zoom in like we're zooming in on a map, right? I mean, after all, this is maps for your trading. So if you take a look at that predictive trade candle, what we have here is a predicted high and a predictive low. So the predicted high is at the top of that trade candle. The predicted low is at the bottom of that trade candle. And so what we're expecting here is price to range within that gray candle for the day. Now, this particular candle is shaded green on both ends. That means that the high is in fact expected to be higher than the previous day. And we can see that if I put my cursor right on the high of yesterday, the predictive trade candle is expecting a higher high. Well, we're also expecting a higher low. So if I put my crosshair on the bottom of that wick from yesterday, you can also see that we're expecting a higher low as well, meaning rising price action. Now, just because things are rising doesn't mean that, well, let's just face it, the markets can be the markets and things can happen. So although you have a lot of confidence in this bullish expectation, you may also want to put some levels of protection in place. And that is in fact what we would call a stop loss. It's one way to manage your position. And so, and again, I just said one way to manage your position. That's not the only way, but that's what we're focusing on in today's session. So if we utilize this predictive trade candle, if we know how far price is likely to move within this predictive trade candle, you can then utilize this predictive information, this artificial intelligence that's forecasting the range of price to set your stop. Now, price isn't always going to hit it to the penny, although it does get really, really close. But you may want to just set this a comfortable distance from the predictive trade candle. Now, whether that's 20% from the predictive trade candle, you could certainly do that. You could set this at the next key level. But let's talk about that predictive trade candle for right now. So if you notice, this predictive trade candle again gives us the high and the low. I'm going to map that out along the chart as well. So what I'm going to do is just come to views. If you have the software, you can do this yourself, but you can also map out those predicted highs and those predicted lows. And you can see this darker blue line at the bottom is really what we're going to be focusing on. This is where price was expected to hit the low for the day. All right, so in case you're wondering, here up in the upper left-hand corner, you can see this is our predictive low values, is that darker blue line. All right, so as you can see, that predictive low holds really well in a nice uptrend. So if you're setting your stop, maybe just a comfortable distance from that point, then you have a stop loss that's doing its job. It's keeping you in the trend, but also providing you a bit more of protection in case things go against you. And that's exactly what a stop loss is for. How many of you get stopped out too early too often? I want to know kind of what are your struggles with setting stop losses, because again, use the artificial intelligence to your advantage here. Oh, thank you very much, Stephen. I appreciate that. I'm glad that this is helping. My goal is to make sure that you guys always come away with some new piece of information to take back and incorporate into your trading. And so as we talk about those stop levels, right, even in the midst of an increased volatility, and let me just back this out a little bit to our trend where we had that pullback, if you will, right? So you guys can see right here, and I'm just going to jump on back to our medium-term crossover so you guys can see the difference. All right. This, in fact, is where we saw that bit of a pullback or some shorter-term weakness within the trend. Now, the trend remained green the entire time. We already established this blue line stayed above the black line, right? But what do? Do you get out here? Do you sit on the edge of your seat biting your nails? I hope not. Hopefully you have set some stop losses in place to protect you. So now jumping back over that you understand how to use the predicted high and low, we can see if you're setting those stops just a comfortable distance from that predicted low, you have less of chance of getting stopped out, but you're also moving with that market trend. All right, so you do have that safety net, but you're also allowing that trend to work itself out, because let's face it, nothing in the markets moves in a straight line, at least for very long, right? And so when those pullbacks happen, are you prepared for that? How do you understand the difference between just a pullback and a larger reversal? Well, stops can be a big part of that, right? If it hits your stop and it goes below, you may have wanted to get out anyways because it's probably pulling back to the next level below that stop. But that's the importance of setting strategic stop losses. So what I'm going to do is actually add on, we have support and resistance. Now, guys, I know what we've looked at so far comes included in the VantagePoint software. All right. But I also want to take a moment to just take a look at some key levels, because this is another way of setting stops. So maybe you don't have access to VantagePoint yet, and so you need another way to set your stops. You could use key levels like support or resistance. You could also use things like the Fibonacci sequence as well. So let's take a look at some key levels first. And I'm again just going to take a look at support, and I'm also going to take a look at resistance, okay? So if you notice, support is shaded in green here on the screen, and then resistance is shaded in red here up at the top. So support is green, resistance is red. This is that simple, okay? And then of course resistance pushes down on price, support pushes up, okay? So we can see that as we get into resistance, it can be difficult for price to push through resistance, all right? And with that difficulty comes a little bit of uneasiness, right? Maybe a little bit of fear coming into resistance. Should I take profits? Is this going to be able to break through resistance? Am I going to get stuck in this? Is the bottom going to drop out? And that's why stops are important. So if we come to resistance, as price approaches resistance, understand that there is increased risk as price approaches resistance, because there is downward pressure there. All right. So that's a very key piece to understand, is when are you at increased risk? Because guess what? The next step is raising those risk protocols to match the risk that you're at. That's good position management. It's adaptable based on the conditions, based on the risk. So that risk assessment is vital. I can't stress that enough. So as price, as I mentioned, approaches resistance, we become at increased risk. You may want to tighten up those stop losses. And you can see the predictive low does a great job of that for you. If you just set that stop a comfortable distance from that predictive low, you see you would not have gotten stopped out here. You would have continued to ride that trend. And that's the importance of the predictive information here in VantagePoint. This is how to utilize AI to set more strategic stops, so you don't get stopped out early, so you can win more potentially, right? And hopefully not get stopped out as early, and really take advantage of those market trends. Now, oh, perfect. Good, Stephen. Well, I'm glad you've been with us for a while. Stephen says he's been here since 2015. Great. I love to have experienced users in the sessions. You guys ask the best questions, so keep them coming. Now, does anyone use, we've talked about support, because, you know, support can also be used as stop level or even potential profit targets as well. So as I'm going to take the same scenario here, as we start to come at increased risk, you may set some profit targets as well, or up to the next resistance level. So I'm going to just back this out a little bit further so we can see where that resistance level is actually established here. So that next zone of red is the next resistance level up. So this could be a potential profit target or those increased levels of risk, because what happens when the market goes down? You want to take profit if you're at it, right? You don't want to give all those profits back. So you can use support and resistance for profit targets, but also for stop levels as well. Because now that price has broken through that resistance, this old resistance that we're seeing right here, that was established at this red arrow on 121, has now become support. All right. So you can, in fact, use this as a lower support level if you're in this longer term, or if this is a longer term hold for you. This is all going to be determined on your specific trade style or strategy. How far are you going to set your stops depends upon how long you want it to run. A tighter stop, well, that's going to be a shorter term expectation because there is that potential for a reversion. But if we set them further, then it's allowing for a little bit more flexibility within that trend. So identifying your stop loss strategy is, again, a very key piece of any trade strategy. So if you don't have one, now's your hint to make sure that you start to develop that stop loss strategy. And it may take some trial and error for you, but I'm hopefully giving you some tools to really test out and see what works for your risk tolerances, because everyone is just a little bit different. Each trader is as unique as they are themselves, and that's the way we like it. So we just give you the information and the artificial intelligence to help you trade better in your own way. Now, we've talked about the predictive trade candle. We've talked about support and resistance. Does anyone use anything else to set stops? There are a couple of additional pieces that we could pull in to today's session, but I also want to get to some other charts as well. So let me just come on over to Bloom. I'm going to jump on to some different charts, especially ones that have been on some extended runs here recently, because when things get a little far overextended, that's where traders tend to get a little bit nervous, right? Raise your hand if that's ever been you, where you've been in a trend for a while and you're like, oh, this can't keep running. Maybe something like Micron, right? Bloom, also another really, really great example, is like, when is this going to pop? And having stop losses can also help you to assess where you're comfortable getting out. And so you don't want to set them too tight, but you also don't want to give back everything that you've worked for. So there's that fine balance between the two. So as we take a look at Bloom, we have a full crossover. We've got a bullish trend. We've got our full pieces of confirmation here. I think you guys can see this as we really start to see this trend taking off, where we've got the crossover to the upside, the green neural index for price action, the predictive differences or strength, they're really coming in to bolster that trend. And when we see this occurring, then of course we've got the confirmation here from the artificial intelligence for that bullish expectation. And so then it becomes about managing that position. And so I'm also going to just plug in another view here, especially for my VantagePoint users, but I'll work through a couple of different strategies in case you're not using VantagePoint just yet either. So if I switch this view, this is what we call the triple cross view. So much power in the triple cross. Do I have any users, VantagePoint users, that are not using the triple cross to help manage positions? Maybe you're underutilizing some of the power that you already have at your fingertips. So I'm hoping to shed some light here. If that's the case, let me know. Stephen, Bollinger Bands, fantastic. I love that because there's that measure of volatility with the standard deviations as well. And so you really do have that flexibility for the price fluctuations. And so we'll take a look at a couple of those strategies too. What about Keltner channels? Do you use Keltner channels? Now you've got my curiosity piqued. So I digress. Let's jump back to the triple cross here. So as we see, the triple cross gives us 3 separate predictive moving averages. So these are all predictive moving averages powered by the artificial intelligence here on your screen. And the triple cross is something that I actually talk about quite a bit because there's just so much information here if you know what to look for. And one of those key pieces to look for is in fact going to be the T-cross long level. So if you follow my mouse, you'll see that darker blue line that really forms the base of that triple cross. And that T-cross long level can also act as a very dynamic level of support and resistance. So maybe you're not using verified support and resistance. You could also use the triple cross, or that T-cross long is a supplement for that support as well. As the trend moves up, you can see that level's going to move up with it because it's an exponential moving average, but it's predictive. So it actually has 3 days of predictive data built into that exponential moving average, or EMA for short, because if I say exponential moving average 10 times fast, we'll get a big jumbled mess, right? But if we take a look, this is very clear, right? We can see that this provides that additional level of support, which can also give you expectation for stops. So if you're in a longer trend, as long as our price action remains above that T-cross long level, we've got a really nice expectation here, especially for longer term management. As long as that trend remains green, we've got that nice bullish expectation. Now, if price action were to drop very quickly below that T-cross long level, then you've got that stop or that profit in place already, so you've protected yourself. You've been proactive about the potential for a longer term trend reverting back into a bearish move, or a correction, if you will. Now, aside from a correction, which is a larger movement to the downside, like what we see back here, we also have the potential to just have a short-term little, pullback, if you will, or reversion to the mean. And so with the T-cross long level being a mean, it's an 18-day predictive exponential moving average. I'll give you the formula there so you guys can see. Some traders will use a 20-day EMA. So if you're using it on a different platform, you wouldn't have the 18-day predictive EMA, which is incredibly powerful, but you can utilize the 18-day or maybe even the 20 in your own platform. And so as we see this rise, we've got that nice trend continuing. Price action will oftentimes revert back to that mean, and we can see that happening in a pullback, but never hits that level, which then would, of course, have kept you in setting that stop loss for protection. but not to your detriment, right? And so that's that balance that we have to have there. Now let's talk about profit targets here. So that's the other key piece, is setting those profit targets. So let's just go ahead and add back on those support and resistance zones. I'm going to keep it super simple today, guys, so we can just take a look at the support and resistance. Maybe if we have some time, we'll look at Bollinger Bands, maybe Keltner channels if you guys want. But that's up to you guys, right? So let's take a look at those profit targets. If I switch on back, now you know how to use the triple cross for setting stops and position management, right? But let's jump back over to the medium term cross, because here we had a cross as well as our lineup, right? We already identified this as a potential entry point from the predictive standpoint, from VantagePoint's predictive indicators. Now, where would the next profit target be? Where would we really expect this trend to hit before we have to reassess? And that's what I want to make very clear. We've talked about stops. Let's move on to a little bit more profit target focused conversation. So when it comes to setting profit targets, first, let me know in the comment section. Just type in profit target. If you are setting profit targets, let me know. Because essentially, that's the first benchmark that you want that trade to reach. Without goals, it'd be very difficult to achieve anything. Well, the same thing is true for a trend. All right, trading has got so many different life skills involved in it, right? So when we talk about, growing anything, especially your trade account, you have goals. Well, why not have goals for the trend? That way you can manage the movement, manage the growth, and better understand when things might not be going in the way that you had hoped that they would or expected them to. And so once we see that expectation, all right, some of you do set profit targets. Some of you are saying no. Okay, that's all right. Maybe after today, right? Hopefully this is encouragement to say, hey, I can do this. If I break this down and I train and I look at the software and I really try to make myself better and grow, then, sky's the limit, right? There's unlimited potential in the markets. So let that be your word of encouragement for today. So as we see, we've got that crossover entry signal here, right? We've all seen that. I don't think we need to rehash it. But now what's the next step? Is setting that profit target. And so we have a resistance level where we know prices typically pause and have a little bit higher risk at these resistance levels. We've established that. This resistance level we saw earlier on 12.8. And so as price comes up to approach that resistance, that would be the initial profit target. Even back here on 1.2, we saw that resistance level. So for those of you using the software, use your profit calc tool, which is up in the corner up here. I'm just going to draw a line from point of entry to potential profit. All right. Now I'm going to calculate, and we've got a move there of 23.5%. This is going to tell you whether or not this has got enough of a move for it to even be worth taking the trade. Basically, is there enough bang for your buck there? All right. You want to know before you enter into a trend, if price only achieves that first target level, are you okay with that? If you are, fantastic. You're one step closer to execution. If not, also fantastic. You're one step closer to finding the real opportunity that you're looking for, that you'd be comfortable with, that you'd be confident with. So that's okay if it's a no. But I would venture to say that most of you in this session would think maybe 23.5%, you'd be fine with that, right? Even 20%. If there's anybody in there that says no, let me know. Absolutely. All right. So let's go ahead and remove that here. So now we know, okay, the first profit target, it's enough movement, enough runway, if you will. I tend to think of it as a plane taking off, right? We're not crashing and burning here. We've got enough runway for this to really start moving and, in fact, generating some momentum, right? It's got enough to get off the ground. And so as this trend starts to climb, we reach our profit target. Now, you have two choices here, okay? You really could exit at your profit target if you're getting out and moving on to the next position. Now, That's one choice. The other choice is to say, okay, now that I've accomplished my goals, what's next? And I'm not telling you to do one over the other. This is really a personal trade decision. If you like quick profit taking opportunities, then hey, once you hit that profit target, be confident, you know what to do there. But if you're looking for a longer trend, then at that first profit target, we reassess goals. Once you achieve the first goal, you've got to keep pushing yourself, got to keep growing. And so that is the next piece. What's our next profit target? Well, guys, we've got resistance right here. All right. So we can see that we have resistance that was established way back here, right? On what date was this? 11/10. So we were on 11/10. We had a resistance level that caused some pausing in price action, and we can see that that would be our next profit target. Now we don't quite hit that profit target. This is where our stop losses come into play. So on this day, 113, we don't hit that profit target spot on. We almost get there. Let's see what price was. So price's high was 145.85 on that day, right? And let's see what our resistance was. 147. So we were a little under $2 off, right? So, or just about $2 off. So with our profit target not achieved, again, this is where your stop losses would come into play. So again, just walking through some of these trends to give you an example of how to do this on your own. So let's go ahead and apply that P high, P low level, right? So P high, P low is that predictive trading range. All right. So here, if you set that stop loss a comfortable distance, right? Maybe you set it tight and you got stopped out and you had a great profit, right? So here, if you set a tighter stop approaching resistance, then you might have gotten stopped out with a profit. Let's just go ahead and take that all the way up to the predicted low. Again, you might set that a little bit further away, but that's up to you. Is anyone going to complain about a 38.5% win? Right? Give or take, of course. Now, I'm not saying that everybody's going to be able to do this, but obviously walking through the trend just like we're doing now, managing that position, managing the stop loss, you can see the probabilities really start to stack in your favor. And it's that edge that's going to give you the confidence and really allow you to find more opportunities like this and, most importantly, better manage them because now you've set goals and you've set fallback levels. Okay, so we don't always jump back all the way to the beginning. We set that stair step, so we're only falling back 2 steps instead of all the way down the full flight of steps. So setting that profit target, maybe you got stopped out. Now, if you were in this trend longer term and you said, hey, I have some confidence in where this trend is moving, you may have switched over to that triple cross, and that's where you could just even set a trailing stop moving on up or use that T-cross long level to continue riding that trend, which you'd still be in now. So those are 2 very different perspectives on how to set stop losses, 2 different indicators, 2 different really strategies for a tighter stop loss or for a bit more, longer term expectation as well. So it really just depends on your risk tolerances and knowing who you are kind of limits what you fall for. All right. So make sure that you know who you are as a trader and you've got that plan mapped out. That will eliminate a lot of the insecurity that you're probably feeling or uncertainty about some of the moves if you have that plan in place. So you can be proactive versus reactive. All right, I say that all the time. Be proactive, not reactive, right? Reactivity just gets you emotional. And trading based off of emotions is not a great thing, right? So make sure that you have that plan in place. All right, so let's take some ticker symbols. All right. And let me just come back because I'm just taking a look at some of the comments. Steven, great. Well, hey, listen, when things pull back, that's also a great opportunity. I'm just kind of coming back to your comment on SLV and GLD. When things pull back like that, that is also another really great way. Let's look at that. You guys want to look at let's look at gold, GLD, right? This is the hot topic here. Has been for a while. So as we see, I'm just going to go ahead and load up our triple cross here so you can see how many times price action has come down to really test that level, but never really drops below too much below that T-cross long level. So you can utilize that T-cross long level to manage that position. And then Stephen, I think it was you that was also saying the Bollinger Bands. So let me just clear this off here for a moment. I'm going to make things very simple. I'm going to pull that T-cross long out and I'm going to add the Bollinger Bands, right? For stops. So here you could also look at that standard deviation. Now VantagePoint's Bollinger Bands are set up slightly different for a swing style of trade. So we're using a 1.5 standard deviation. And so we can see, you know, if you're using that lower Bollinger Band for stops, you could utilize that. In an uptrend though, you might also use that simple moving average as well. Another great indicator for this is Keltner channels, especially for setting those profit targets and when we would expect to see a potential pullback. So I'm going to add on the triple cross again so we can just kind of see the difference here between those moving averages. And of course our Bollinger Band is also a predictive Bollinger Band. So you've got a predictive simple moving average, and then the 18-day here is the predictive exponential moving average 18-day here. Now we reverted back. Now we did hit that stop loss. So with the extreme drawback that we saw on gold, if you did have a stop, you likely were getting stopped out because you want to protect yourself from things like this, right? Rather get stopped out early than take this drawdown all the way back. And then I think what Stephen was referencing is that, hey, expected the bounce pulling right back on in. So I'm going to go ahead and just add on that support and resistance there that we saw previously. So you guys can see, because again, key levels are going to impact price action. And so when we see price action coming back down to test key levels like support and resistance, this is again a target for the downtrend. So a target for the downtrend here puts that downtrend at risk of bouncing up. And so the market works both ways. You just have to flip it on its head. So if we can see that this move to the downside is coming down to test support, which we in fact did. You can see we had previous resistance levels that in fact became, you know, new support after we broke through them, but we weren't able to push any further. And then we saw this renewed momentum as we again approach these key levels because we've got support pushing up on price. So there is the potential for that price action to bounce off of those key levels, especially if we're at an extreme. And so I know I normally don't pull up too many of our more advanced optional indicators here on our live stream, but I think it's important that everybody kind of just understand the importance of looking at the markets from a profit and stop loss standpoint as well. So let me get my Keltner channels pulled up here. Just gonna give myself a good refresh and let's see if that loads for me. There we go. Gotta love a bit of a delay. All right, so you can see now using the Keltner channel here, price was way above that Keltner channel, right? We could even add those Bollinger Bands on simultaneously, which is one of my favorite things to do here. So we'll add those on. Again, I know I'm going a bit more advanced, but price action being above that upper Keltner channel is really setting us at an extreme already. So expecting a potential pullback, especially as we have such an incredible move that happens. So let's just highlight where price action gets outside of those Keltner bands and we have the potential for that pullback or that reversion. But look, it hits some of those key levels we were talking about, whether it be support or that exponential moving average. So make sure you have key levels you're using for your stops. If it breaks down way below that, then hey, you probably saved yourself some heartache there, took some profit rather than getting out at a complete loss. But if it bounces off of those levels, then you're staying in and remaining in that trend for the longer term expectation. So setting stops, profit targets is all a balance. And so again, as the Keltner channel, I mean, gosh, look, guys, price is at extremes. Whenever we're at extremes, it can only run so far for so fast. And this is where you have to really set those protections in place. And hey, if you get stopped out, let's just put on, let me take off some of our indicators here because I know it gets a little messy sometimes. So let me just clear up some of the chaos here. Now that we know we're already at an extreme at those points, you guys can clearly see that, right? let's jump over and plug in those predicted high and predicted low values. So if you were setting that just a comfortable distance from the predictive trade candle, you can see you actually would have gotten stopped out up here. I mean, still significant profits depending upon where you got in, of course, but seeing that, you protected yourself from a lot of this. And then, hey, if things look good and looks like a bounce, there's no rule that says if the setup shows itself again that you can't take advantage of it, right? Take advantage of the opportunity when it arises. And hey, if it shows up again, no rule says you can't get back into the trend. Just don't chase it, right? Don't get emotional about it. Trade strategically. If you get stopped out, that's fine. You get stopped out. Don't get mad when the setup shows up. Re-enter, right? That's certainly a strategy, right? But don't make emotion a part of the strategy. All right, so some of you have some additional ticker symbols. Let's jump on into that. So let's say TMC. You got it. Gosh, we only got about 20 minutes left. Time flies when you're having fun, right? Okay, let's look at TMC. Let's look at BCE. Someone had asked earlier for a ticker symbol. I can look back. I think it was CRISPR, CRSP. I can look back in the chat if that's not it, or if you can type it in. I think, Gail, it was you, if my memory serves me correctly. But we've had a lot of people join since the session started. So please, if I got it wrong, let me know. Give me the chance to make it right. All right, CRISPR, CPRX, okay. Catalyst Pharma. Now, guys, as you can see, we've got some earnings coming up. Does anyone trade on earnings here? We've had some really good sessions on earnings in the past, so go back and check out some of those training sessions if you do trade earnings. Thanks, Gail. Oh, perfect. Good. I love it when I get it right. Doesn't everybody, right? So let's take a look now. TMC, coming to TMC. So if we look at TMC, is there a specific question on TMC that you guys want to review today, or just kind of let me know? That will be helpful. I'm keeping an eye on the chat here as we go through. Okay, so I'm just going to walk through the full analysis. So here's our traditional crossover. This just looks very volatile. This is probably a chart that, I don't know, maybe if you like spreads, right? Otherwise, we've got a good potential opportunity to the downside where we've got that cross happening here. And we've got our bearish neural index and the predictive differences are trending down. So great potential bearish opportunity. Hey, I don't discriminate, right? Markets move up, markets move down. They move sideways. As long as you know what they're likely to do and have a strategy for that movement, there's potential profit taking opportunity. So, market movement is what makes money. And so with that movement to the downside here, right, we can see that continuing to trend down. This is not a market that we really have any expectation except for maybe a bounce, but we'd have to take a closer look probably at support and resistance. Now, if you were in that uptrend, again, this is where I say jump back to the predicted high and predicted low. You can see you likely, again, would have gotten stopped out here on 126. And then if the setup resumes, then, hey, you've got a great potential re-entry point. You saved yourself some heartache. You probably got in at a better price. So no use in only looking backwards. I mean, AI looks forward. You should too in your trading. All right. So as we jump into some additional charts here, the predicted high could also be a profit target level as well, especially if you trade intraday. If you plug in that predictive trading candle, you can see the predicted high and the predicted low. So let's just take a quick peek. I'm curious to see what TMC did today. Let me just jump on over. I gotta pull that up on my end. I'm curious to see what the range is. We haven't done this yet, so my mouse wants to jump around on me a little bit. All right, there we go. Okay. TMC. Days range, 665 to 718. All right, so 665 to 718. Well, our predicted low was 635. right? So again, if you're day trading, right, if you are expecting those profit targets, if you can look at anything right near the predicted mid-range or lower, that's typically going to be a higher probability of moving to the upside. I'm just going to zoom on in a little closer here. I mean, this is expecting a downtrend, so I'm not going to talk about this from a bullish standpoint unless we open down towards the low and we saw some movement back to the upside. That's how you could utilize that predictive trade candle. Or if we opened up towards the upper high, then potential coming back down. But we'd have to also take a look at that support, right? So let's look at support and resistance as we look here. Just going to add those on. There we go. So we're in support. So we may expect to see some tough time breaking through support, especially as we start to see price action slowing here. Especially, you know, yesterday and the day prior, we had a hard time breaking through support. We pretty much so sat right there. And this is what I referenced earlier. Support is going to push up on price, causing it to either stall out or potentially bounce up off of those levels. And so we would need some really, really strong movement or momentum to the downside. And if you guys notice your short-term predictive difference down here, that momentum starts to move sideways. So not giving us that full confirmation of bearish strength, really helping us to push down through that support level. So without that, you may be very cautious at that point as well. Again, this is looking like a fairly bearish expectation, but up against support, you may want to be more cautious. Again, set tight stops. If you are bearish on this move, maybe the previous support, since we've broken down through support, this old support now becomes new resistance. So you could use that as a stop if you are in a short position. Because keep in mind, if you think the market's going to go down, you're going to set your stop loss to the upside, right? Now, we've got some additional markets to walk through, so let's go ahead and do that. Now, BCE, we do have earnings coming out here. So this is the other piece that I was mentioning, that it can throw some things for a loop, because with earnings, we've got this implied volatility rush and crush that happens to come in typically starting anywhere from 21 days to 7 days prior to the earnings announcement. And we can see that just about 21 days ago, maybe a little bit more than that for sure, you can see that this trend really started to move in with earnings expectation. In fact, if we start kind of here where we started that next uptrend, let's just see how many days that's been. I don't feel like counting the candles. So there's 17 days, right? So if we jump on back, again, that really rings true where we got that crossover about 23 days. So anywhere from 21 days on into 7 days, and another 3-day marker is where earnings is really going to start affecting price action. So anything that affects the movement or the price of an asset that you're trading, you should be aware of. So knowing that we're coming up into earnings is key. And obviously we have sort of this implied volatility rush that's happening here. So let's talk about stops. So you could use that predictive trade candle. Let's see where BCE is. You could also, let's just go ahead and set that short-term crossover here. I'm sorry, not short-term crossover, the predictive high and predictive low. All right, you get me to 448 and I start getting a little tongue-tied. So let's jump on over to that predictive trade candle. So we can see that predicted low for the day, right? Again, setting that a comfortable distance. The range for this day was expected to be, and guys, in case you're wondering where I'm looking, see over on the left-hand side of the screen, you'll see the predicted high is 2601. The midpoint is 25.82. That puts us right smack dab in the middle of that predictive trade candle. And then the low is 25.63. So if we take that into account, and of course using that for stop losses as well in a confirmed uptrend, which we have with those 4 points of confirmation, that started about 23 days ago. We can see the range for today, 25.79 to 26.25. So, oh my gosh, look at that. We hit it almost. So just a little over 10 cents there, almost 20 cents. So if we 25.79 was the low, so you would not have hit your stop loss here, but you would have had that protection in place, setting that just a comfortable distance from the predictive trade candle. So let's talk about some strategies to calculate those stop losses here. And again, not one system is going to work for everybody. So just some examples of this. Keep in mind, I'm not a licensed advisor, so I'm not going to give you trade advice, but I can certainly help you to better understand the indicators so you can really incorporate them into your own trade strategy. So part of stop losses is understanding how to calculate those, where to place the stops. Well, you keep hearing me say a comfortable distance from that predictive trade candle. Well, if this is the expected range for today, this is the fluctuation we would expect to see in price, you can use that range. So the range itself is 38 cents. So maybe you take half of that and subtract it from the bottom and put half of that range, that's 50% of the predictive trade candle, add it to the bottom, and that's a comfortable distance for you. Now you have a way to calculate that strategically that you can map and track its performance and adjust if necessary, right? You could also maybe use a 20% of that predictive trading range. You just take 20% of the 0.38 and subtract it from the predictive low, and that would give you your stop loss. So that's just another way to calculate the predictive range and your stop level, how far to set that. So you have a strategy, not just some sort of willy-nilly, I think I'm going to place this stop loss here. Let's hope that it protects you. Let's hope we don't get stopped out. Hope does not equal strategy, right? So have something that's measurable, achievable, right? Make sure that you're tracking it. The other piece here is let's go ahead and put on the support and resistance. So let's take a look at BCE and just put on, see, look, support is all the way down here. Well, you're probably not going to want to give back all of those profits, right? So that's where a different type of stop is necessary. You can't always just put a stop at support because it might be too far away. This is where you could use that predictive trade candle for that trailing sort of stop, or you might even, using that same concept we did for the predictive trade candle, I'm going to use average true range. This is something that we don't talk about often enough, I don't think. But the average true range is actually an average of that asset's typical price range over the last 14 days in this calculation. You can adjust that as well. But if we take the typical range of an asset, meaning how far does this asset typically travel during the course of the day? And so using that typical range or that true range, that average true range, you could also use that along with the predictive trade candle to set that as your risk and even potential reward scenario as well. So if you take, I'm going to get my mouse to work for me. If you take that range of 44 cents, all right, that's over the last 14 days. This asset typically during the day on average moves about 44 cents. Pretty darn close to that 38 cents we were talking about previously, but you can see the ATR is going to calculate that for you. And then of course you can add that to your entry point. You could add that to your profit target, or you could subtract for a bullish position. You could subtract that from the predicted low just to give you a bit more of a cushion. And so who has ever heard of like a risk reward ratio where you maybe risk 1 to make 2 or risk 2 to make 1? Sometimes you risk 1 to make 3. How many of you have heard of a risk to reward ratio? Oh, good. Chad, I am glad that you're getting so many takeaways from today's session. That's fantastic. All right, so if you have heard of a risk to reward ratio, then you may already, and maybe you're using it. That's usually comes from the ATR, that average true range. So if you're risking 1, you're using 1 ATR, right? And your reward is 2 times that ATR. So in this case, because our ATR is 44 cents, guys, right down here in the bottom left, all of those values are given to you. You don't have to calculate it. You don't have to go back and pen and paper the the calculation or the moving average, or should I use an EMA? How do I do that? Guys, let the software do that for you. That's the power of artificial intelligence, all right? And keep in mind, guys, that little blue dot right there, it says powered by AI, all right? That means that this is a predictive ATR. It's taking into account that predictive trade candle already. So you may set that from the midpoint, from the low. You can decide what works best for you, but using that ATR calculation, if you're risking 1, you'd set your stop loss at 44 cents away. That reward would then be 88 cents, right? That's risk 1 to make 2. You can easily do that calculation because you have the original value that's going to give you that expected price fluctuation, right? So these are all different ways to calculate stops and, again, profit targets as well. So if you take a look at our initial trend, let's go back. We looked at things from a stop loss standpoint, but let's take a look from a profit target standpoint along the way. Going to jump back over to that medium term crossover. So where we saw that crossover to the upside back on 1230 here, full alignment here, full confirmation. This is where then we start to manage that position. Once you're in position and you've hit that first profit target, we can see that you could use resistance in this case as that first initial profit target. If we did that calculation, let's just take a look. Oops, wrong button. There we go. All right. So from that entry, and maybe you got in here, right? Just depending upon where you entered. And then, of course, using that first profit target in and out pretty quickly, right? But you've still got over 2.5% in just a day. I mean, that's in and out pretty quickly. Now, at that resistance, you could always reassess. That means moving up stops, adjusting stops based on the trend. So do you use that ATR calculation? You certainly could. Could you switch over to the triple cross at that point since we have an established bullish trend? You certainly could. So as long as price remains above that T-cross long level, you've got confidence, even if you're setting that stop just maybe under or a comfortable distance from that predictive T-cross long level. And then, of course, if I jump back over to the P high, P low value, even through here, we can see you could easily navigate through that scenario, either using the ATR or those predictive calculations as well. So having confidence to stay, having confidence to set those stops, having confidence to reassess. It's all about confidence. Confidence is going to give you consistency because it's going to allow you to track. Make sure you have that plan as well. That is what is going to help you as a trader really assess where you would expect things to move going forward. So again, set a goal for your trade, just like you do in life, right? Set a goal, set that profit target, but give yourself a fallback plan as well. And that's your stop levels. That's really how you win more, lose less in the markets, is being adaptable, but also being strategic. Don't react, be proactive to your trade approach and make sure you have that really that guide set out in place. So profit targets, stop losses. And, I hope today's session was enlightening for most of you. It seems like it was. So we'll, of course, be back on for more sessions next week. Later this week, we tried to provide as much information and knowledge and just pass that along to all traders out there. So whether you're a VantagePoint family member or whether you're just seeing VantagePoint for the first time, thank you for joining us. If you need more information, don't forget to go to VantagePointForecast.com. Also, please, if you like today's session, like and subscribe to our channel. Also, turn on those notifications. We do sessions like this all the time. All right. So we want to, again, be a resource for you guys out there. So trading is hard enough. You might as well not do it alone, especially when you have great resources here at VantagePoint. So have a great rest of your day, everyone, and we'll see you guys on the next session.